Happy New Year, everyone. I'm Marty Pospisil, and welcome to my January 2022 market update. Lots of data to share with you. I'm feeling energetic, just got my booster shot, so if I do disappear and just like keel over, you'll know what happened. Let's get started right away. Okay, so first of all, as my regular subscribers know, one of the metrics I use to track the market is called the sales ratio. And the sales ratio basically is just the absorption rate of product in the market, how quickly it sells, what percentage sells every month for a particular product category. So if less than 11% is selling on a monthly basis, we're in what we call a buyer's market, downward pressure on the pricing. If between 12 and 20% is selling every month, we're in a balanced market. It's not favoring the buyers or the sellers. But if more than 21% of the product is selling on a monthly basis, we're in what we call a seller's market, upward pressure on pricing. We've been in seller's markets for most of our product for most of the pandemic, interestingly enough, and it's continuing. So let's pop right into it. Let's look at our market speedo, our phenomenal video here of what's happening in Metro Vancouver. As of last month's data, still record-breaking changes, low inventory. We're getting a lot of people out there looking to buy, and our speedo indicator is 45%. Now that's extremely active for Metro Vancouver. Lots of upward pressure on pricing when you're in a sales ratio of 45%. So let's look at the actual data year over year from this time last year. Total number of listings, no surprise, down 3,176 in Metro Vancouver, was 4,500 this time last year. Total sales, no surprise, down to 1,441, was 1,554 this time last year, but the sale price is actually up 20%. Year over year. So that's kind of interesting snapshot because we're at the end of the year. I thought I'd do a year over year. Let's look at my table for January of this month for detached houses. First of all, year over year activity down 23% for houses in Metro Vancouver. Benchmark price for detached houses up 22%. Big jump over the last year. Over the last month, we also saw a jump in prices on detached houses in Metro Vancouver of 2.1%. Very significant jump. Attached townhomes and duplexes, overall activity year over year is down 28%. Benchmark price for townhomes up 22%. And last month, we had a jump of 1.5%. Pretty consistent. We're seeing between 1 and 2%. Over the last few months. Attached condos, we're seeing year over year sales activity only down 1.4%. The prices for condos are up 13% in Metro Vancouver, and last month we saw an increase of prices of 1.2%. So very, very interesting numbers for December, mostly inventory related. We'll jump into that a bit later. Remember our sales ratio. Let's talk about west side of Vancouver. Detached houses. Now, interestingly enough, right now, as we enter January, we are at a 17% sales ratio. So that is a balanced market, my friends. There's no pressure upward or downwards. It's not favoring the buyers or the sellers. So houses on the west side are balanced. Now, compare that to our peak of 28% in April of last year. Interesting. Let's look at condos and townhomes on the west side. Extremely hot market, 43% from the data that just came in. You can see some very, very hot markets on the west side. And you can see that 43%, interestingly enough, is only outpaced by April of last year where we saw that peak. So we had a very, very good month on the west side for condos and townhomes, 43% sales ratio. Let's look at condos, townhomes downtown, 33%. Still very strong sales ratio, strong seller's market, 33%. That was the case last month. We were beat by 38%, but in April we had 51%. So still fairly active downtown, not as active as the west side, but still pretty active. Now let's look at the east side. 32% sales ratio for detached houses on the east side. Again, pretty consistent with last month. Over the last few months, we've had a pretty consistent, strong sellers market in detached houses throughout the east side, and east side condos and townhomes. This is the blow you away number, 67%. Now again, the only time we outpaced that was April of last year. So we're seeing some record sales ratios last month for people who are buying very little product, a lot of competition, pushing that activity up of the absorption rate. 67% condos on the east side. Incredible number there. So what's happening in the burbs? Now specifically, I looked at the burbs over the past year. Now, it's very, very consistent over the past year. Throughout all of the suburbs, we see inventory is down, solds are down, prices are up. We're seeing significant changes. Port Coquitlam, 39% down in terms of inventory. Mission, 47%. Pitt Meadows, 50%. Sales are down almost as much, but pretty well consistently throughout the lower mainland, we see that sale prices are up, of course, year over year. And that is for detached houses. We're seeing the same for attached product throughout the burbs. We are seeing the same story. Prices are way up. Inventory is way, way down. And the number of sales in each of these outlying areas is down. So we're seeing lots of demand, not enough inventory to meet that demand, driving the sales ratio up, driving the prices up. Same story. Year over year. Okay, what's going to happen? Well, crazy times. Let's look into what our drivers are right now. We've got consumer confidence. It's pretty high, but it's temperamental. It's based on the pandemic, what's happening in our lives facing this pandemic, and the need for housing and more space. Our second driver is the cost of borrowing. Okay, mortgage rates are on their way up. There's been some news, which I'll show in another slide later, that we're going to see an accelerated pace in the interest rates going up. So that's increasing. Inventory levels. We're at historically low inventory levels, and this is the biggest factor which will change pricing in the future, and perhaps we're going to see some changes in that with our spring listing rush. So those are the three factors we're going to look at. Let's talk about consumer confidence first. This is kind of related to consumer confidence, but look at the rental trend. This is back in July. It's a typical one bedroom in Vancouver. Look at the pricing, what's happened since July. It went from $1,716 a month to $1,831 a month. That's a 7% increase in rent just over the last few months. And you can see Vancouver's outpacing Victoria, Toronto, and Ottawa for one bedroom rentals. Now, the reason I'm showing that is we're seeing a lot of people who were renting, because these rents are increasing, jumping into the market and buying, increasing the demand on the market as well. So employment is way past the pre-pandemic levels. It grew for the 7th consecutive month. It's way up. We're having no issues there. That's great for consumer confidence. Unemployment rates, look at where they are. In Canada, we're at 5.9%. Provincially, we're at 5.3%. So we are doing extremely well in the unemployment front. This just out in Globe and Mail yesterday. Canada is increasing our quotas for immigration. Interestingly enough, we are going to be increasing. Like 2019, we had a quota of 341,180 immigrants. This year, we're looking at 411,000 coming into the country. And next year, in 2023, they're going to increase that even further by another 10,000 to 421,000. A lot of these people coming in, 88% are moving to the large cities, and Canada's policies, of course, cater to newcomers with wealth and job skills. So these are typically consumers that are going to buy real estate. So these increased targets for immigration are certainly going to fuel our market even further. So more positive news on the consumer front. Cost of borrowing. Here's where we get the other end of the story, the factors that may pull our market down. We are going to see a rapid increase in the rates. Here's one that sort of tells it better. Here's where we are now. This is what we are looking at happening over the next 2 years. Almost like it's going from 2 to 4%, almost doubling in 2 years. That's definitely going to have an impact on affordability for a lot of the entry level and upgrade consumers buying real estate. So the mortgage rate forecast is on its way up. This is just a correlation of 5-year fixed term with respect to that housing activity. You can see when the 5-year rate hit the lowest, the housing activity peaked back in April of 2021. So that's kind of interesting. This just out, the Feds just had their meeting. And if you read the minutes from the Federal Reserve, they are warning that the rates must rise faster in order to tame the soaring inflation. Remember, I've mentioned before that as inflation increases dramatically, the rates are pulled with it. You can only hold them down so much. And that is a meeting I believe they just had at the end of the month. Now that's happening down south. We're probably going to follow suit with that in Canada, so there is a relation to that. So I thought I'd throw that up there to let people know we can be expecting the rates to increase even a little bit more, accelerating more. Now let's look at the third factor in our market for predictions, inventory levels. This is the main factor keeping the prices as crazy as they are. There's just not enough product out there. You can see when the pandemic began, we saw our inventory levels drop off immediately, grow back up, and then continually drop off. But you can see historically our inventory is quite low. Inventory levels and how they impact price. This is a really interesting graph that a real estate board did recently. If you look at the month's supply, so this is basically an inventory curve. When the inventory curve goes up, the MLS Housing Price Index, or prices, go down. So where you see a peak in inventory, you see a trough in pricing. Where you see a trough in inventory, you see a peak in pricing. So they're inversely proportional. So there's a definite relation between inventory levels and pricing, and that's exactly what we're seeing right now. This is another way of looking at it, buyers versus sellers. This is really interesting if you look at the ratio of buyers to sellers. Now the black line at the bottom is buyers, and the green line here beginning at the top is sellers. So as the sellers outpace the buyers, we get a softening market because there's more product on the market than there are buyers back in 2019. Then of course, today what we're seeing is the buyers are outpacing the sellers by a ratio of 1.5 to 1. Very, very significant. Look at that peak. When did that happen? April. We all know from my table and my stats that April was our peak month in pricing and activity, the highest sales ratios on record over the last year, or last 2 years, since we've been tracking it. And you can see the number of buyers drop down. But again, in the last couple of months, they've increased. But look at what's happened to sellers. So there's no doubt in my mind why the prices have continued to increase over the last few months, because the number of sellers or the inventory has dropped off and the number of buyers is continuing to increase. So as long as that ratio remains high, that's going to push us into that seller's market, and it's going to be upward pressure on pricing. We're going to see that continue until this volume of sellers increases or the inventory increases. So that's really interesting. I can dive into this very deeply, but again, if you're looking at detached, attached, and apartments, you're seeing very similar. Now remember, a sales ratio in the detached was in a balanced market. Now why is it in a balanced market? Hey, look at that. The buyers are matching the sellers. That's why it's balanced. Look at on the attached, buyers are outpacing the sellers. That's why we're in a seller's market. Same with apartments, much more buyers than there are sellers. So that's another really interesting way that the board's coming out with to track the activity and the sales ratio in the market, looking at that ratio of buyers to sellers. Now, Overall, active listings dropping down, 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 detached, attached apartments across the board. If we look at specifically Metro Vancouver, houses, you can see we had a peak of inventory back here in May of last year, and it's consistently dropped. We're at almost half, 2,195 houses in Metro Vancouver for sale today compared to 5,278. Almost half the inventory that we had back in May is on the market right now. That's not untypical for January, but that boosts up the market when you got all those buyers out there buying and the inventory is way down here. High sales ratio, prices increasing, and that's why we saw that dramatic increase taking place. Looking again, Metro Vancouver townhomes, condos, same story. We had our peak inventory back in May, April, and then it dropped down, and the inventory dropping down as well in condos. So consistently low inventory. Again, that's what's providing that upward pressure on prices. So again, this is kind of interesting. I know I'm getting diving deep into this buyer-seller type graph, but I'm quite excited about them. As you can see, I'm a graph person. Now, look at the detached. You see how the seller's curve is actually above the buyer's curve, and the sales ratio, remember, is at 17%. Again, we're looking at west side. If we look at attached, look at the buyers are outpacing the sellers. Sales ratio is at a whopping 43%. And now here we've got the buyers, we're very, very much above the sellers. Now they've kind of evened up, but apartments and attached are grouped into the same sales ratio grouping when we're looking at the stats, so that's why it's the same at the 43%. But if you did separate out apartments, you would see that it would be more balanced than it would attached. Okay. East side, same story. If you look at detached, we're at 32%. Buyers are higher than sellers, and we're in a seller's market, but not a lot higher. But if you look at the attached and apartments, look at how the buyer line is way outpacing the seller's line. So the demand is significantly higher than the supply, and that's why we're getting a sales ratio of 67%, which results in crazy pricing, crazy bidding wars. We'll talk about that again later, and pushing the pricing up. Okay, so the HPI, or the Housing Price Index for Greater Vancouver, that's interesting. You can see here's the pandemic right here. This line, you can see what's happened on detached, you can see what's happened on townhomes, and you can see what's happened in condos. Overall average house prices and attached townhome prices and condo prices, here we are. There's that run up we've seen throughout the pandemic. We saw a little bit of hesitation here last year, but boom, it's just been shooting up. Not sustainable, but really interesting to see when you look at that microscopic snapshot, the last few seconds of the time of real estate. And of course, the sales to actives ratio, or it's the same sales ratio. You can see we've got detached, we've got condos, and we have townhomes now, the hottest product throughout Greater Vancouver, all taking off in this seller's market band. This is balanced, this is buyers. We only dipped into that a little bit, and you can see how those are taking off. So things are looking really active right now. Alas, remember, there's going to be some stuff happening this year. Potentially, remember the election campaign about banning foreign home buyers. We'll see if that happens. That would definitely have an impact. We're talking about, or the government was talking about banning blind bidding. That would definitely have an impact when you're dealing with multiple offers. So those may happen. And remember, provincially, they are looking at introducing that cooling off period. And the cooling off period gives the buyers the ability to walk away from a transaction they've entered into within a specified period of time, which makes it very difficult, of course, for sellers wanting to know if their home is sold. But that is the provincial government's way of trying to cool off our market and give people a choice when they're purchasing real estate. That's definitely going to impact our market. So if you look at it, and everybody asks me, well, Marty, what's going to happen next month? What's happening this year? Nobody can predict the future. All I can say is here's the factors. Here's what we can expect to look at. These are the determining factors, or at least the most important ones that we follow. If there are no tax changes, that would be nice, and the interest rates remain low, and the inventory levels stay low, we'll see prices continue to increase. Or let's just say, to keep the prices where they are now, if the rates went up only a bit and the inventory stayed the same, meaning low, we could see prices continue the way they are now. However, there's a lot of negative things that can happen as well. What if they change the capital gains? They go from 50% to 100%. I guarantee you my phone will be ringing off the hook with all our investors wanting to sell to take advantage of the 50% capital gains, unless they make it retroactive. Or if it leaks out, if they're going to announce that in the budget, we'll be really busy in February listing a bunch of investment properties. That will have an impact. 2-year ban on foreign buyers, definitely a negative. Banning blind bidding, that will impact the market. If the pandemic persists or we get another wave, or how many other variants are we going to be looking at? BC cooling off periods, that's going to have a negative impact. Interest rate increases, of course, will impact the affordability, and the consumer confidence can fall if all of these things start happening, and there may be a mass listing surge. So what that would mean is prices would fall. If these happen, prices will continue the same. Well, remember, we were in that transitionary phase last month, and none of these happened yet. And there weren't any tax changes. Interest rates are still pretty low. Inventory stayed really low. And you can see we're actually following that green line over the last month. Pretty cool. Time will tell what happens this month. January may not be anything too drastic. We might see prices continue very well through January and February. Things might start changing as we hit March and April. Really difficult to say. It depends on when these factors get introduced and which factors do and don't come into our market. That will determine what's going to happen. Okay, so let's talk about a little fun fact. This is a really cool thing that I just found announced on the net. If you are a traveler and love New York City like we do, the New York Financial District and Seaport Climate Resilience Master Plan was just announced in December 29th. Really, really cool. They are rebuilding their whole Lower Manhattan area. And the reason they're doing that is because with global warming and rising water levels, by 2050, they were expecting monthly flooding of the Lower Manhattan area, and by 2080, daily flooding. So, of course, they had to spend money. Mayor de Blasio and the New York City Economic Development Corporation, I believe that's what it stands for, is introducing this new multi-level development. I thought it's really cool, and I thought I'd tell you about it. It's elevated by 15 to 18 feet and two different levels. The lower level will be a continuous waterfront esplanade designed to connect humans to the water. So that's how massive it is. It actually runs from the Battery all the way to Brooklyn Bridge, and it's going to cost between $5 and $7 billion. A lot of waterfront cities are going to be doing things like this. You're going to see more and more of this. There's a view of what it's going to look like. Pretty cool. Pretty excited about seeing that introduced. And that's just a little fun fact I had for you. So that is my update. Again, if you have any questions, more than happy to answer your emails. I do get a lot of them. Happy to. Please subscribe to my site. I'll keep you up to date. Like us on Facebook. That's my monthly update. As always, thank you very much for joining me. I'm Marty Pospisil. Have a great January.